Pro trader Alan Knuckman, the chief market strategist at St. Paul Research, joins us now for some trader talk. Hello, Alan.
Hello, Angie. This S&P surge now is all about maximizing portfolio position profits.
You have had a number of winners this year already. What can you tell us about your trades?
Yeah, trading is all about timing and having the time to be right. So our current positions that we have for April, just a couple, UNG, which is natural gas, Twitter, and Block are all closing in on their 50% target number one. The rest of the plays have plenty of time, are mostly June and further out. We've got Plug, which is Plug Power, and Freeport-McMoRan, which is very close to its all-time highs. Both of those are closing in on 100% gain. As a reminder, time is a trader's most valuable asset, and we have time to wait for the winners to develop.
Well, this week you are feeling the financials, Alan. Tell us about your latest trade.
All right, today's trade trigger, bank backup. So if you look at XLF, the ETF that tracks the financials, it had backed off. It had backed off 15% off its top from January to its March lows. Now, technically, it's been trading mostly between 35 and 40 in the last year. A breakout of that range targets 45, which is 10-15% up above. The play I'm looking at here is buying a call option at the low end of that sideways range at that key support, buying a 35 call, going out to September. Again, plenty of time. September call trading for about $5.50 or so. It's $4 in the money. 6 months of time for development here. Now, smart money sees something, and you're seeing some money flows into the financials. Even though the news out there seems to be negative, this looks like a time to buy. That 35 call, if it gets up to that 45 first target, a very modest target, obviously, if it gets that 45 level, that option will gain about 100%.
Let's get your trading day takeaways.
All right, let's talk trading takeaways. Trading takeaway number one, foreshadow. All right, the broad market barometer S&P has surged more than 10% with earnings ahead, and it's now only let me say this again, 4% away from all-time record highs, once again. And number two, more than the macro market. So we've got the Dow less than 5% away from its top, and we've got tech now 15% off the low just 2 weeks ago. So everybody's playing ball. And number three, sentiment shift. The fear factor VIX fell 50%. So it was cut in half from 38, now it's down to 19, and it's underneath that $20 psychological level. So that's very important. The key again, lower VIX means more S&P upticks.
Alan, always a pleasure to have you here. Thank you.
Thank you.
Go to businessfirstam.com for where to see our show on TV.